What's the fastest way to boost your credit score? Tradelines. And in today's video, we are going to be doing an entire masterclass covering everything that you need to know about trade lines. We're going to be covering authorized user trade lines, primary trade lines, and some of the best trade lines that you can get to boost your credit score and get approved for funding. Let's get started. Welcome to the channel, everyone. My name is Credit Coach Nicole Scott, and in today's video, we are going to be covering some must-know information. I always tell you guys, if you knew better, you would do better, and that's why I do these videos, to teach you exactly what you need to know so you can have long-term success with credit. And in today's masterclass, we're going to be covering everything from A to Z on primary trade lines and authorized user trade lines. And some of you may be asking, well, what are trade lines? And that is a great question. Trade lines are a credit account. Whether that credit account is in your name or somebody else's name, it is a trade line. And those are what show your ability to repay back debt as agreed and show you're credible. So the first thing that I want to cover here, because I've been getting some recent requests on, hey, cover fintech companies, cover credit builders. Stop filling your credit report with a bunch of that stuff. We want to fill our credit with quality trade lines, real bank trade lines. And what does that mean? If you do business with a fintech company to build up your credit, what if that fintech company disappears in 2 years? We all remember what happened to the My Jewelers Club, right? It was a $5,000 trade line and you paid a membership and it reported to all 3 credit bureaus, and then all of a sudden it stopped and we lost the trade line. So I recommend doing things the right way, which is building with real financial institutions and banks. And in this video, I'm going to show you exactly how you can do that and get your wheels starting to spin upstairs on how you can create your own primary trade lines with real banks and financial institutions. Sure, there's a few other credit builder accounts out there that are helpful and useful in some cases, but I would much rather someone get real bank trade lines with some of the best known banks, so that way they are in competition and you're adding what's called comparable credit to your profile. I'm going to be going over one of my clients' stories and how when she came to me, her highest credit limit was no more than $3,500, and as a business owner, that just wasn't going to cut it. I'm going to show you exactly what we did, the strategy that I do for all my clients, and you can take this same strategy and apply it to yourself. But make sure to watch all of these videos from start to finish because you don't want to miss anything in here. I always tell you, if you knew better, you would do better. And that's exactly what I'm going to be giving you today. Now, before we get any further, I need you to do me a favor, my friends, and I need you to pump up that algorithm. Give me a huge thumbs up and like, comment, subscribe. Make sure you are subscribed. Make sure you turn those bell notifications on. And most importantly, share this information with a friend. I'm going to be showing you guys one of the most powerful ways that you can create a primary trade line and share it with a friend. So let's talk about the types of trade lines that are out there. There are authorized user trade lines, which are very popular. Those are called AUs, authorized user. They belong to somebody else. So for example, if mom had a credit card and she added you as an authorized user, you would inherit all of mom's credit history and credit limit for that particular account. We just need to make sure that the account is 100% paid on time, not even one late payment. No, if an account has even one late payment, it is no good. We're also looking for accounts that have a very low credit utilization, preferably less than 15%. However, if someone plans to pay it off, then that might work as well. But we just don't want to inherit somebody else's debt. I see this happen time and time again where a parent will add their child to a card card as an authorized user. Next thing you know, the parent has a late payment or they've maxed out the card. Let's just get you removed at that point because it's not providing any value if an account, especially an authorized user account, has a late payment or high credit utilization. Now, what the credit utilization is say you have $1,000 credit limit. Your utilization is how much percent you are using of that available credit limit. Now, if you have, say, $100 balance on a $1,000 card, that's only 10%, right? But if you have a $900 balance on a $1,000 card, that's 90% utilized. We want to stay away from that. It's very important for you to understand that you must try to keep your credit card usage under 15% of the available credit limit. And that's why it's so helpful to have high limit credit cards. So if you did need to make a purchase, you're not going to drop your credit score from the utilization because you've got some wiggle room. It's also very important to know that you don't want to keep a balance on all of your credit cards, especially when you're going after funding. I learned this from one of my good friends over at PenFed. They told me when you have a balance on all cards, you look like a risk. It doesn't matter if the balance is $900 or $9. Why would you need to use all credit cards? And I know what you might be thinking. Well, Nicole, I watched another video and they said keep a small balance. Well, I'm here to tell you it's just not necessary. I understand the purpose and what you might be trying to do, but here's the thing. Even if your credit cards have a zero balance, which is what I recommend, all but one or maybe two cards need to have a zero balance, okay? You can keep a balance and work two cards at a time, but don't carry a balance for a long period of time. You really want to make sure that your personal credit is decorated for success. I always tell my clients and everyone inside of the credit community, we have to decorate our personal credit profile so that way we can get business credit and we can qualify for anything that we want. The personal credit cards are not meant to be used and abused. They're meant for decoration. They're meant to leverage, earn, get the points, but don't spend more than what you don't have in cash. That's how people get themselves into a lot of trouble because at the end of the day, we still have to pay this money back. I know it's not what you want to hear, but I give you the information that you need to know, not necessarily what you want to hear, because if you knew better, you would do better. And we are focused on long-term success, not microwavable success, okay? Because we all know if it comes quick, it's gonna leave just as fast, my friends. And I don't want repeat customers. I want people that are going to be able to show me all of the wonderful results that they've had after our training and after we've worked together. So let's get into this. I know I kind of get off topic, but guess what? It's all in good faith. The next type of trade line is going to be your primary trade line, or a co-borrower, right? If you co-sign or you add somebody else to the account, those are considered primary accounts, meaning you are responsible for these accounts, and if you make a late payment, it's going to just tank your credit score. These hold the most value for somebody. So it's really important for you to understand the concept of building up your credit and not filling it with a bunch of ass trade lines. You want to focus on quality bank trade lines. We're not focused on quantity. We want to focus on quality for long-term success, because if you open a credit card, we don't want it to close. We want it to stay open, and we want other banks to recognize, hey, XYZ bank over here gave me $20,000. So I want you to give me $20,000 or $30,000. Or, hey, we see Navy Federal give you $30,000. We'll give you $25,000. So you want to be able to build your profile the way you want to get funded, guys. And I know that might sound like, how the hell do I do that? I didn't know either before I really got into credit, okay? And it's never too late. It's never too early, all right? Just learn. That's all we can do and apply. So we've got authorized user accounts, and the only type of authorized user accounts are going to be revolving, okay? And now those are credit cards and lines of credit. Now, when it comes to AUs, these are just credit card accounts that belong to somebody else where they're going to add you as an authorized user. You don't get a card in the mail. You don't get anything except for you inherit that card's good credit history, all those on-time payments, and most importantly, that credit limit. So you can use it as comparable credit to get credit cards in your own name that are a higher limit than what you would have normally gotten approved for. Because when I was first starting to build my credit, I could not get approved for more than $500, maybe $1,000 at best. And it was so frustrating because, what am I going to use these cards for? I can't barely spend anything without my credit utilization going haywire and dropping my credit score. So that's why it's very important to, walk this fine line with credit, because it is a very fine line and you really have to know how to play the game if you want to get to the next level. And that's what it's all about. This credit stuff is a game. It's not taught in school. Nobody's going to tell you this stuff. And when I was first learning, I'm like, where do we go to learn this? Who's going to tell us this? I became that person so I can share with you guys all of the hacks, all of the pertinent information that you need to know that's going to give you the success that nobody else wants to share with you. All right. So primary accounts, again, most important type of accounts for you. You're definitely going to need accounts that are in your own name so you can show the banks that, hey, I can manage these type of accounts. I can manage installment loans. I can manage credit cards. I'm not a risk whatsoever. And you need to have both types of accounts. You need to have revolving accounts, which are credit cards and lines of credit. And you need to also have installment loans, whether that's a student loan, auto loan, mortgage loan, whatever type of loan where you pay the same installment amount every single month until that balance is paid to zero. Once you open up a credit card, you don't want to close it because we need that history, all right? And closing cards can actually hurt your credit score. I know a lot of people in the past that I've spoken to said, well, so-and-so really angered me and I'm going to close the account because they pissed me off. It's not going to do anything but hurt yourself, okay? And that's why education is so important when it comes to credit, because you have to know how to play these games. If you're angry with them, just put the card in your drawer. Keep it open, but just don't spend any money on it. That's perfectly fine. You're still going to get that okay mark, that on-time payment reported every single month to the credit bureau. As long as that account stays open, it's going to continue to report history. So basically, you're just going to use them to help you build history. You can add a co-borrower to an installment loan. A lot of people co-sign for auto loans and co-sign for different accounts for people. I never recommend doing that, but if you did co-borrow with someone or co-sign for someone, that would be considered a primary account for you, and you would be responsible for ensuring that the payments get made on time every single month. And that is why it could be so risky when you are co-signing for somebody, because what if that person makes a late payment? Then it's going to reflect bad on your credit report. And I see this time and time again where a parent will co-sign for their child to get a car, and then the child makes a late payment because they're just not educated on how important it is to make those payments on time. So that's why it's so important for us to be able to learn this information so we never have to co-sign for anybody. We can do all of this strategically, and we can actually help our children, friends, family, or if you're a business owner, we can help people understand how they can qualify. All right. So primary trade lines, they're going to include revolving accounts, credit cards, secured credit cards, a line of credit, home equity line of credit, also known as a HELOC. Basically, that's where you take a line of credit against your property. So it is secured by the home. So if you don't pay it, there could be a lot of trouble there, and they could potentially take your home as collateral. So you don't want to do that unless you understand, and you don't really want to take any credit out unless you plan to pay it back as agreed every single month. I know a lot of people, they want to, get the funding, and then when that bill comes, they're like, oh, I'm gonna exit stage left. Bye-bye. And you try to run off on the plug, and it's not gonna work like that, guys. You're never going to get to the next level if you can't even pass level 1, 2, or 3. So let's get with it and have our mind focused. You have to train your brain first, all right? That's the first thing that you have to do, because believe me, there were so many times where I'm like, man, what if I just take this $50,000 loan and just, skedaddle? No, it's not worth it. You can get so much more than a lousy $20,000 credit card or $50,000 loan. That's a drop in the bucket for these banks, right? So why would you shoot yourself in the foot over something so small when there's a whole lot more on the horizon for us, guys? We have to think longevity here. And I understand life happens, but we have to make sure that we do our best. When we take this credit out, we got to pay it back on time. So be prepared for that. And then we've got installment loans. Those are going to be auto loans, student loans, personal loans, secured loans, pledge loans. That's basically where you use your own savings money in your savings account and secure the loan with that amount. So it's like a secured loan, right? Instead of a secured credit card. These are my favorite, by the way. We're going to be covering the benefits of these. Home improvement loan, home loan / mortgage, right? And you can even add your rent to your credit report now. There's places like Boom Pay. That's probably one of my favorites, and you can actually backdate and get 24 months of rental payments reported just to show your ability and have another trade line on your credit report. Now, these aren't significantly impactful when you're going to get funding. These are not going to, impact a whole lot in regards to funding, but it does help to add that other, just another primary trade line, especially if you've been paying rent. And the thing that I like about BoomPay is they don't have to contact the homeowner or the landlord or whatever. As long as you've got the rental agreement, you can upload that and you can connect your bank accounts and they can find the amounts and they can add that to your credit. There's other places out there as well. There's rent reporters, but a lot of the other places do not report to all three like BoomPay does. And BoomPay is very inexpensive, so I'll leave a link below in the description. You can check out BoomPay. I've also got my free credit kit below. You can check that out. Ton of free value there for you guys. Lots of information that we're going to be covering today. We've got the credit union list in there, which has over 100 different credit unions, how to join, and just some basic information regarding that. More primary trade lines that are helpful when you are building credit, because I know it can be tough when you're working on building credit and your credit score isn't the best and you're like, well, where do I go to get credit, So we've got Tomo, and Tomo is cool because they connect via Plaid to your bank account, and they will approve you based on banking transactions instead of credit. Lightstream, I love Lightstream because let me tell you guys, if we play this right and we can go get a loan from Lightstream, we can take that same money and we can create primary trade lines via secured loans with different credit unions, so that way we can get approved for the credit cards with those credit unions and not have to do a secured credit card. One of the credit community members, they did exactly what's inside of the Navy Federal guide that I put together for you guys, which is a free guide, and they built their relationship with Navy. Didn't even have not even a 600 credit score when he applied, and he got $15,000 credit card. All right. So it's all about building the relationships up with the credit unions. Okay. And if you're not familiar with some of these credit unions, get familiar. I had never even heard of some of these credit unions. So believe me, I was new to this at one point myself because we're so used to driving down the street and seeing Bank of America and Chase and Wells Fargo and, all of these big name banks that we've probably had accounts with at some point. But a lot of us have never heard of some these credit unions, and they are really the hidden gems, especially Navy Federal and some of the other top 10 credit unions out there. And I'll be showing you guys a website later on in this series where you can actually find the top credit unions, guys. Top credit unions. I'm telling you, game changer. Alliant Credit Union, secured credit cards. I'm not a huge fan of secured credit cards. I get it. Sometimes we got to do it, right? But I would much rather somebody do a secured loan, focus on building the relationship with the bank so we can bypass the secured credit card, because generally secured credit cards only go up to maybe about a $5,000 limit. That's about average. Some places go higher, right? But generally average about $5,000. Not a whole lot. You can go much higher with secured loans, right? And you still have access to the money. So say you have $5,000 from your tax returns and you put it into a secured card, and then the secured credit card doesn't graduate for a long time and you need the money, and now you've got to close the secured credit card. That's super counterproductive, all right? With the secured loans, it's still a primary account. It's just an installment account, and you still have access to the funds. So that's why we want to go after the secured loans, aka pledge loans. And a lot of credit unions offer these type of secured loans, aka pledge loans. Navy Federal is the pledge loan. PenFed has a secured savings loan. DCU has a secured savings loan. And basically you're just using the money that's in your savings account to secure that loan. And then what you can do is pay it down, wait at least 30 to 45 days. Let a billing cycle filter through, okay? Let it report. All right. And then you can pay down that account about 80%, 85%, right? The goal with these secured loans is to keep them open for a minimum of 2 years. All right. Minimum 2 years. Why? We need the history. All right. That's most important, is to show our ability long term to pay as agreed. All right. So if you pay down your loan, you probably won't have a payment due for a while. But what you can do is set up a small auto pay, maybe $5 a month, calculate it out for, 24 months, whatever you have left. Just set up auto pay where you're paying maybe $5 a month. So every month that balance will go down a little bit. You do have to pay a small interest, but it's well worth it, because if you're going to be dealing with these other places to build credit, there are always going to be, some sort of fee or, something that you're going to have to pay to use them to build credit, right? And you're better off building credit with well-known financial institutions that other banks are going to recognize and they're going to respect, and they're going to use that as comparable credit. Like, oh yeah, well, hey, if they can trust you with it, so can we. We don't see any signs that you're a risk. You've paid all of your payments on time. And that's how you build up your credit profile. So that way you can be seen as credible with comparable credit lines that you're establishing and decorating your credit profile with, right? We've got Grow Credit, we've got Grain, we've got Credit One, again, not my favorite. Rent Reporters, they don't report to Experian. We've got Boom Pay, that's a rental one. Again, they report to all three. So these are some options that you could potentially use, right? But here's my favorite hack, right? If you don't remember anything from this video, remember this, guys. All right, this is, I'm telling you, like, if I would have known this earlier. And let me tell you a quick story before we get into this, okay? There was a gentleman, I don't know, a while back, and he created a $100,000 primary secured loan. All right. And he was actually selling this for like $5,000 to people. And he would add them as a co-borrower to this $100,000 secured loan. I mean, that was crazy, because he got caught, and now, was it worth it for him? I don't know, because they shut down his entire account. So I don't recommend selling these type of accounts and changing out the co-borrowers all the time. But the cool thing is, say for example, you do a $20,000 pledge loan, aka secured loan, right? You can actually add a co-borrower to the secured loan, and you guys will both inherit this account as a primary trade line, which is a game changer. Because say for example, you want to help your son or daughter, your child or a family member qualify to purchase a vehicle, right? But they don't have comparable credit. Maybe they're young and they just don't have anything that's going to get them approved, so they need a co-signer right now. Well, the best thing that you can do is create this secured loan and then add them to that account. With these accounts, they're not an authorized user. It's actually a primary account. So that's a complete game changer to be able to create a primary trade line and then add a family member. And you can add someone at any time. So say, for example, you've already had this account open for 2 years and now you want to add your son or daughter. They have to be at least 18 years of age, right? Maybe they just turned 18 and now you want to add them. You call them up, you call the bank up over the phone and say, hey, I want to add my son or daughter to my secured savings loan, and they're going to inherit all of that history as well. So it's an awesome way to help friends and family add comparable credit, especially when they want to qualify for some sort of installment loan or just have a thin credit profile and don't have many primary accounts in their own name. So cool hack here. One of my personal favorites. Again, don't recommend selling these type of things. I recommend just using them for yourself. I mean, do with the information what you will, right? You can certainly make a lot of money if you did choose to, sell it or offer it inside of some package. But it's a very cool way that you can create primary trade lines and then add other people so that way they can, reap the benefits as well and inherit that entire account and payment history to their credit profile. And the cool thing is that it won't have much debt owed. You'll see the original high limit of the account to show that it was originally a $20,000 balance. And that's why I say people, slow down a bit. I know everyone's in an all-fire rush to pay down their pledge loans, but let it report. Give it 45 days, give it 60 days. Let that initial account and amount report, right? And then you can pay it off about 85%. I say 85% because you don't want to pay it off too quickly and you want to allow yourself to be able to make small payments every month so the balance is going down every month, but you also want to keep this account open for a minimum of 2 years. Longer the better, of course. If you can keep it open for 5 years, that's even better. But this is a really cool way that you can create a primary trade line. You can actually use money from your credit cards, which I've had clients do. You can go get a personal loan and use those funds to create more primary trade lines and really, boost up your credit profile. The cool thing about these type of secured loans, there's no credit inquiry required and it's going to report to all 3 credit bureaus. So, I would say this is my go-to credit builder when anyone's asking me how they should build credit. Start working on your relationships with the credit unions. Find 3 credit unions that you want to start working and building with and open up a checking account, savings account, do a secured loan. Usually the minimum that you can do is $250, but if you can do more, that's always going to be better. The more, the merrier. You know how they say, right? And even if you could do like 1,000, my first pledge loan was $3,500. I know everyone should have just recently got like a tax return. I know about the time I'm recording this, it's about tax season. So we want to make sure that we leverage that money and put our cash on our credit report, guys. I've also had people where they've had family and friends do it and then just add them as a co-borrower. So that way there's no risk involved and they're just inheriting that positive trade line onto their credit. I've had people that had their parents do this for them, family members, because they're like, man, I need to add some comparable credit. I can't get approved for this auto loan. I don't have any comparable credit. And great thing about it is, this is not something that's new. It's just a lot of people have never heard of it. And I teach this inside of the credit community as well. So I was on a call last week with the community and someone was saying that they had their client do a $20,000 pledge loan with Navy Federal, and then they were approved for an $80,000 auto loan. So it's just a real game changer regarding credit, because not only are you adding this as a primary trade line to your credit profile, but you're also building that relationship up with the bank. A lot of these fintech companies, they can't do shit for you in the future. There's no funding. There's no business funding. So we want to strategically build our credit and build our relationships up with banks that if we're going to invest in them, we want them to invest in us, right? But let's invest and start building with the banks first. Let's do a checking account, savings account. Make sure you have overdraft protection on. Do a CD, a certificate of deposit. Banks love CDs, okay? You can do multiple CD accounts, but the goal is to get to 5 or more banking products with the bank that you're building with. And if you can only handle building one at a time, do that, right? If you can have a small direct deposit, 5%, 10%, go in there. Great, perfect, right? But start building, all right? You can do multiple pledge loans with the same bank. I don't necessarily recommend that unless one was just a really low limit and now you're going to do a second one that has a huge limit, because you can spread the wealth and you can do a pledge loan with, say, Navy Federal, and then you can take that same funds, transfer it to another credit union and do another pledge loan with that credit union. So now you're creating 2 primary trade lines for yourself, and you can add people to help them as well. It only makes sense. And that's why I tell you guys, you got to watch the entire video. This was part 1 of the Tradelines Masterclass. I appreciate you watching. Make sure that you have subscribed and like, comment. Most importantly, share this information with a friend, because this is the type of information that we teach inside of the credit community so you can build long-term success. My name is Credit Coach Nicole Scott, and I'll see you next time.